Hi, I am Anna. I come from www.ntvforex.com. Gold triangle looks set to be breached. Analysis http ntvforex.com News ID E3BA84914 2021 p.m. As stated several times in our recent videos, gold triggers the attention despite its consolidation due to the formation of a triangle since the beginning of August. After the record flows during 2020 that boosted gold and most of the commodity and commodity-related assets to record highs, the precious metal has entered a ranging market in the past 4 weeks. Despite the correction in August, the long-term sentiment remains strong, with big banks forecasting that due to gold's relation with inflation, it could reach $3,000 within 2021. More precisely, Bank of America forecasted that gold will reach $3,000 an ounce over the next 18 months. Driven up by declines in real inflation-adjusted interest rates and dollar weakness as a result of the severe disruption to the U.S. economy caused by the pandemic. The rally so far has mostly been driven by investor buying. And we see that trend continuing over the course of the next 6 to 12 months, said Francisco Blanche, commodity strategist at BofA. The expectation for rising positive bias for the precious metal was NBSP strengthened in August after the FOMC announced a shift in its monetary policy strategy toward an average inflation goal, allowing prices to run moderately above 2% for some time to make up for periods of undershoots. This announcement in regards to higher inflation and full use of a range of tools to support the economy increases the odds that central banks will follow the Fed's approach. This is something that was also seen NBSP from the ECB last week, when ECB President Lagarde clearly played down the importance of the negative HICP rate for August, and suggested that despite this, deflationary pressures have actually receded somewhat compared to June. This suggests that central bankers do not really care about inflation risks at the moment and are still committed to the very expansionary monetary policy and the PEP program. Traditionally, gold is often hailed as a hedge against inflation, increasing in value as the purchasing power of the USD declines. Decreasing yields indicates an expectation of weak economy, which in turn causes inflation to fall, and so gold is used as a hedge against it. Hence, lower real interest rates remaining low while government deficits expand. $20 tn worth of stimulus globally so far would lower the opportunity cost of holding gold, as buying bonds does not remain attractive. As such, this week's agenda is crucial for gold's outlook, as the FOMC, BOJ, and BOE meeting are in the spotlight. For the FOMC, attention will be on the SEP summary of economic projections where we will look for significant revisions to the growth and inflation estimates made in June, while the dot plot should underscore an unchanged rate posture for several years ahead. Gold technical picture. What we now see, as stated earlier, is a triangle formation with gold unable to exit the $1,900–$2,015 range. However, as the triangle looks set to reach NBSP its completion, gold's sideways move could be set to end as well. Hence, any clear breakout of the triangle is in the spotlight, as it would provide the medium-term direction for gold. NBSP anything lower than the key $1,920 lower triangle line and 50 DMA is finding support at $1,900. Anything above $1,970, which is a 50% Fibonacci retracement from record highs, could suggest that bulls are reconstructed again. Meanwhile, the momentum indicators are reflecting a neutral to positive medium amp long-term risk and NBSP clear indecision in the short-term risk, as the intraday RSI and MACD lines continue to hang around neutral zone, while the daily and weekly indicators hold positive. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.